Imagine the market surging, your screen glowing green, yet a little voice whispers, "What if it all crashes now?" Or maybe you hesitate to jump on that breakout, scared it could blow up in your face. If that rings a bell, you're not alone. Greed and fear are the twin forces that can turn traders into puppets, and if you don't keep them in check, they'll pull the strings until your portfolio is on the verge of collapse. In this video, I'll break down why these emotions run so deep, how they worm their way into your decisions, and most importantly, how you can stop them from wrecking your trades. By the end of this video, you'll understand. Number 1, why greed and fear are so powerful in trading. Number 2, where these emotions come from, i.e., their root causes. Number 3, how they can make or break your trading decisions. 4, practical tips to tackle them effectively. Let's get started! Part 1. Understanding the role of greed and fear. Let's start by breaking down what we mean by greed and fear in a trading context. Greed, the desire to make a lot of money quickly, often leading to overly optimistic trades or holding on to positions too long in hopes of squeezing out every last bit of profit. For instance, you've probably heard stories of traders who refuse to exit a winning position, only to watch the market reverse and wipe out all their gains. Fear, the anxiety that the market will turn against you, prompting hasty sell-offs or preventing you from entering good trades. Think about the last time the market looked shaky. Maybe you exited a position way before your plan said to, just because you were scared it might collapse further. These two emotions can take your trading strategy and turn it upside down. In fact, they often work together in a strange cycle. Greed pulls you in with promises of bigger profits, sometimes ignoring reasonable exit points. Fear pushes you to bail too soon when prices fluctuate, or keeps you out of the market entirely because you're paralyzed by the possibility of loss. Recognizing this cycle is the first step in getting control over your emotions and your trades. Part 2. The root causes of greed and fear. You might wonder, why do I get so greedy when the price is going up? Why do I panic at the first sign of a market dip? The answers often lie in deeper psychological and evolutionary roots. Survival instincts. Human beings are wired to maximize rewards and minimize threats. This dates back to our early ancestors. In a trading environment, this ancient wiring can translate to chasing big wins, greed, and fleeing from losses, fear, social proof, and herd mentality. We're social creatures. If we see everyone else making money on a hot stock, it's tempting to jump in. The flip side is when everyone panics. We feel the urge to follow suit and sell. This herd mentality can stoke our greed and fear even further. Personal identity and ego. Sometimes we tie our self-worth to our trading results. If you're used to winning trades, your ego might push you toward bigger risks. On the other hand, fear of being wrong in a trade can drive you to close a position prematurely or avoid good opportunities altogether. Lack of a defined trading plan. When you don't have a solid plan, entry, exit, risk management, any market movement can seem like chaos, which is fertile ground for fear. Conversely, in a hot market, no plan means you're more prone to overtrade just because everyone's making money. Understanding these root causes isn't just interesting psychology. It's a crucial step in trading mastery. It helps you be aware of the triggers so you can put a stop to them before they derail your decisions. Part 3. Why managing greed and fear is essential for successful trading. So, why does it matter so much? Can't you just trade based on market indicators and skip the emotional stuff? Consistent decision-making. A successful trader is one who can stick to a consistent process. If your decisions swing wildly because of greedy impulses or fearful sell-offs, you'll struggle to maintain any kind of profitability. The market thrives on people's emotional reactions. Those who can stay consistent often come out on top. Risk management. Overly greedy traders may take uncalculated risks, leading to big drawdowns. Overly fearful traders might avoid risk entirely, missing out on profitable opportunities. Neither extreme is good. Striking a balance is essential so you can properly manage your capital. Stress reduction trading is stressful enough without adding emotional roller coasters. Properly managing greed and fear helps you stay calm under pressure, which ultimately leads to better decisions. No one trades well when they're panicked or euphoric. Longevity in the market. You might have a hot streak fueled by excitement and impulsive decisions, but such success rarely lasts if it's not based on a sound plan. Controlling your emotions is key for staying in the game long term. You want trading to be something sustainable, not just a short burst of luck. Part 4. How to tackle greed effectively. Let's switch gears into solutions. First, let's talk about greed. probably the trickier emotion to pin down because it can feel positive, like you're about to hit the jackpot. Set clear profit targets. Before entering a trade, decide how much profit you'll aim for. Some traders say, I'll take 50% of my position off the table at a certain price, then let the rest run. Whatever approach you choose, make it part of your plan. The key is to stick to it. If you're tempted to keep waiting for just another small push higher, remind yourself of your plan. Implement trailing stops. A trailing stop moves up or down if you're shorting as the price moves in your favor, locking in gains. This tool can help control greed by automating a part of your exit. Instead of trying to guess the exact top, let the trailing stop take you out once the price starts to reverse. Quantify your risk-reward. Ratio each trade should have a clear risk-reward ratio. Maybe your trade has a 1-2 risk-reward, meaning for every dollar you risk, you aim to make 2. Staying true to these metrics keeps you from getting lost in what if it goes even higher fantasies. Take regular profits. Another simple technique is to frequently withdraw or lock in gains, so your capital is not fully exposed. For example, you might take some of the money you've made and move it into a separate account. Seeing realized profits can help you resist the temptation to go all in on the next big play. Part 5. How to tackle fear. Effectively, fear can be just as destructive, especially if it prevents you from taking trades that align with your analysis. Here are some strategies. Have a solid trading plan. Fear thrives in uncertainty, but if you know exactly how you plan to enter, exit, and manage risk for a trade, fear has less of a foothold. You can't completely remove the uncertainty of the market, but you can create certainty in your process. Use stop losses. A stop loss is the ultimate safety net. It limits your downside risk so you don't have to stay up at night worrying about a massive drawdown. Once you place that stop loss, you know the maximum you're willing to lose on that trade. This can dramatically reduce emotional stress. Practice visualization and breathing techniques. This may sound a bit touchy-feely, but hear me out. Anxiety often comes from imagining worst-case scenarios. Spend a minute or two before trading visualizing yourself following your plan calmly. If you feel that spike of fear mid-trade, take a couple of deep breaths to reset your mindset. Small mental resets can help you stick to your game plan. Focus on the process, not just the outcome. It's natural to focus on PL, profit loss, but obsessing over the outcome can amplify fear. Instead, think, did I follow my rules? Did I execute my strategy as planned? If you consistently follow a sound strategy, the profits will come as a byproduct. Part 6. Balancing greed and fear. Greed and fear are two ends of the same emotional spectrum. Learning to navigate both means finding a middle ground where your logic, not your raw emotions, guide your trades. Some days, greed might be the bigger problem if the market's rallying. Other days, fear might creep in if there's volatility or negative news. The balancing act is ongoing. It's never a one-and-done deal. Regular check-ins. Ask yourself throughout the trading day, am I feeling greedy or fearful right now? Is that affecting what I'm about to do? Just pausing to reflect can help you come back to center. Trade journaling. Keep a journal of not just your trades, but also your emotions before, during, and after each trade. Over time, you'll spot patterns. Maybe certain news events trigger your panic. Or maybe big winning trades make you overly aggressive on the next one. Awareness is half the battle. Part 7. Real-life anecdote. Let me share a quick anecdote to illustrate this point. A friend of mine, let's call him David, was on a winning streak in a hot market. He got so caught up in the hype that he started ignoring his trading plan. He put more money into each trade, skipped setting stop losses, and chased trades he normally would have passed on. Of course, it worked until it didn't. One morning, the market gapped down hard, and David lost a chunk of his account because he didn't cut his losses in time. He was paralyzed by fear, and ironically, that fear turned into denial. So, in a single day, greed turned into fear, and both sides of that emotional coin cost him dearly. This is the perfect illustration of why you need to keep these emotions in check. Because when they take over, they almost always lead to the same place. Big mistakes. Conclusion: greed and fear are normal. They're part of the human experience, and nobody is immune to them, not even the best traders in the world. However, what separates successful traders from the rest is how they manage these emotions. 1. They acknowledge them. 2. They plan around them with clear trading rules and risk management. 3. They continually refine their approach based on self-awareness and discipline. If you can follow these steps, setting clear goals, using stop losses, journaling your emotions, and practicing mindfulness, you'll give yourself a much better shot at long-term trading success. Thank you for watching. If you found this video helpful, feel free to share it with fellow traders or leave your thoughts in the comments below. Let's continue this conversation and keep learning together. Until next time, trade safe and stay disciplined.